Hey there, Casey Dim at TaxSaleAcademy.com, and welcome to our weekly tax sale question segment. In this week's question segment, I'm actually going to answer 3 tax deed related questions. These are all very frequently asked questions from those who are just getting started in the tax sale business. So hopefully I can shed some light on these. Let's get started. The first one, can you really buy property for back taxes? It's a common question when people hear about this business. So the tax foreclosure process does begin when somebody fails to pay their real estate taxes on time. In a tax deed state, the county then puts that property into a delinquent status for a specific amount of time, usually around a couple of years. If the taxes are not paid, the property is foreclosed and sold for back due taxes. That's where this question comes from. This means that the opening bid will begin at the amount of back due taxes, interest, and fees owed to the county. Now, while the opening bid starts at the back due taxes, interest, and fees, this is a competitive bid process. Much of the strategy in this business and much of what we teach inside the Tax Sale Academy revolves around finding the lowest competition areas. More competition, more bidders, higher prices, lower returns. Less competition, fewer bidders, lower prices, and higher returns. Very, very simple concept. The key, of course, is to find the sweet spot where you can get properties that you can resell and make money on. In highly competitive markets, the selling price might be near market value. I've seen this time and time again in very, very competitive markets. That's the wrong market to be investing in. So find a new market that is not as competitive, where your margins are more closer in line with what you desire. And while some markets might be paying top dollar for tax deed properties, others might be selling every single property at the back due taxes that are owed. So the answer to this question is yes, you can get property for the amount of back due taxes, interest, and fees owed to the county. But is it easy? No, unless you know what you're doing. In some situations, you can actually get properties for less than the amount of back due taxes, interest, and fees in no reserve or negotiated type sales. So the answer is yes and no. So this leads me to the next question that's very, very popular. This sounds too good to be true. What happens to the other mortgages and liens against that property? The bank will just not walk away. Do I have to pay those now? Nope, absolutely not. I think it's very important, first off, to understand the hierarchy of this structure. The property taxes that we pay, they pay for things we use daily: roads, schools, sidewalk, bridges, parks, fire, police, rescue. Without those services, without those amenities, we'd be in some pretty rough spots. Could you imagine life without any roads, without any schools, any emergency services? I think we are all very fortunate to be able to have these things at our use every single day. But I think most people can agree if we didn't have those things, it would get real bad real quick. So the way the tax sale laws are written ensure that the real estate taxes take the highest priority, that they get paid first. So tax liens have a seniority over all other liens. Now, that does not mean that a bank or lien holder will lose their interest right away when those taxes go delinquent. It is a requirement of the tax foreclosure laws that all lien holders are sent notices of the pending tax foreclosure. In other words, as part of the tax foreclosure process, the county does a title search. They're like, okay, this person has a mortgage, this person has a lien, and they keep going through all of the official records to see who has an interest in that property. They'll mail them a letter, say, hey, you're about to lose your interest in that property. Your lien, your mortgage, is going to get canceled. But what you can do is you can pay off those back due taxes if you want to change that process. If you want to step in, pay off those taxes, it'll provide for you maybe in the future to charge the owner for those. But whatever it is, it's going to protect your interest right now. Your mortgage, your lien, it's not going to get wiped out if you pay those back due taxes essentially on behalf of that delinquent property owner. Of course, if they don't do this, which can happen depending on their equity, their attention to detail, a lot of other factors, they would lose their interest in the property or their lien against that property. And this happens quite a bit, especially when you're talking about certain states with HOAs or mechanics liens. I've even seen a lot of big bank mortgages get canceled out through the tax foreclosure process. So liens and mortgages will not become your responsibility in a tax sale if everything is done correctly. So all this leads up to the next question. I can buy properties for the back due taxes and they don't have any liens or mortgages. If it is this easy, why doesn't everybody do this? First off, the very simple answer, most people are lazy. Plain and simple, most people have absolutely no desire to invest in anything, much less real estate. Of the ones who do want to invest, they're too lazy to learn how to invest. You see, buying and selling tax foreclosed real estate is not like buying and selling conventional real estate. If you think it's anything like the time you bought your house, you are sadly mistaken. In a conventional real estate transaction, for example, you basically just show up. You know, the realtor might open the door for you and turn some lights on, and if you say you like the house, they prepare the paperwork. You sign the paperwork often on your cell phone with a little click of the button with an e-signature. You show up at the closing with your funds wired there from your banker. You're treated with cookies, soda, and you smile for a little picture with their cute sign. That does not exist in the tax sale business whatsoever. There are technical aspects of the tax sale business that can make or break your business. And what I often see happening is people get into this business with the assumption that it is like conventional real estate. They see challenges and they get out without putting forth any effort to push past those challenges because they're lazy. I've even had realtors incorrectly state things like, well, you can't even sell tax sale properties, which is a pretty ignorant statement. Nonetheless, tax sale investing is a lot different than conventional real estate investing. It takes somebody that is willing to invest the time to learn how to overcome all these challenges. And if we're being honest here, the fastest way to learn how to overcome those challenges is from somebody who's been doing it for a very long time in many different markets and many market cycles. So there you have it. Hopefully I've answered a few questions today that were on your mind if you're a new tax sale investor. The tax sale business is a phenomenal business if you have the motivation to learn how to do it correctly and, get this, the drive to execute. That's all I've got for today. For more information on the tax sale business, make sure you check out all the links in today's show notes, including one to our primary training site where we offer the most comprehensive step-by-step tax lien and tax deed training at taxsaleacademy.com. Take care, folks. Bye-bye.